Witam wszystkich serdecznie. Moi drodzy, znajdujemy się w tej chwili w domu Toma Williamsa. Tom Williams we własnej osobie, nasz mistrz, były trader syndykatu. Porozmawiamy na temat jego historii, na temat jego początków, na temat metodologii VSA. To, co chciałbym Wam pokazać, moi drodzy, co Tom mi dzisiaj pokazał, to jest, zobaczcie, ta oto metalowa linijka. To jest linijka, którą Tom przywiózł razem ze sobą ze Stanów Zjednoczonych. Tą linijką, moi drodzy, Tom rysował wykresy, także jest to historyczny przedmiot. Natomiast ta druga linijka służyła do rysowania barów. I Tom dokładnie dzisiaj opowiadał, w jaki sposób wyglądały jego początki. Zresztą część swojej historii opowie tu nam za chwilę. To, co również żeśmy z Tomem przez te parę dni tutaj robili, to tematy związane z VSA. Tom przekazywał swoją wiedzę, w jaki sposób handlował w syndykacie, jakie techniki używał, w jaki sposób otwierał, zamykał pozycje. Powiem szczerze, jestem pod bardzo dużym wrażeniem tych dni i już nie mogę się doczekać, żebyśmy się spotkali w Polsce na seminariach, na webinarach, żebym mógł Państwu tą wiedzę przekazać. Moi drodzy, Tom Williams. Tom, I would like to ask you some questions and some questions about methodology and some questions also about your personality, about your how you become a VSA trader. Okay, can we start? Okay, how did it happen, Tom, that you become a syndicate trader?
Well, I mean, what happened to me was that when I was 20, I was qualified as SRN, as a state registered nurse. And it was fine, it was a profession, but I was always on the lookout for something better. And so I decided to go to America, where everybody knows where the money was. So I joined an agency in Beverly Hills, an agency that sends registered nurses, because I was an RN, California RN, they send out nurses to people who need somebody with them, not hospitals. I used to work in private homes, and I got a telephone one day, and the agency said, look, there's this multi-millionaire, the family is worried because he trades millions of dollars, stocks and shares, and yet he's high on drugs most of the time. So they want somebody, a male nurse, somebody responsible to keep an eye on him. So I thought, oh, this is fine, this will do me. So I jumped into it and I got on very well. And after a few weeks with him, the owner, right, he introduced me to this office that was in Century Towers, Beverly Hills, about 78th floor up in one of these skyscrapers. And they were what they call a trading syndicate, trading the stock market. Now the word syndicate is quite common because you could join Lloyd's of London, a syndicate in the insurance company if you want, where a group of you trade and share the responsibility. So, but because I was very good at technical drawing, as soon as I saw they were drawing charts, I thought, oh, this will do me. And to these sort of guys, having to draw charts is a bit of a bugbear. So I did it for them, and they loved it. And that's how I got my foothold into trading. And I was very, very lucky, only because I was stumbled across this owner of the syndicate who needed somebody professional to keep an eye on him. And I got on very well with him. English people get on well in America. And that's how I got into it. And I used to draw charts. But, matter of fact, I've got the ruler here. Look.
Show us this.
It's right here, look. I've kept this. It's a metal ruler. It's long, as you can see, and you draw trend lines on the chart in pencil, right? And then if they were no use later on, you rub them out. Of course, now the computer does all that. And I've even got the roll ruler here that you run along the chart and draw the high, low, close and volume. Right, I still kept those, and that was very nice. But I was doing that for at least 2 years before I had any idea what was going on. Because these sort of guys, they're not good at teaching. Very few people can. Why should they? They're trading. Their mind is occupied all day long with what they're doing. They're not there to teach you how to do anything. So you're really left alone. You have to pick things up yourself. But one day I was speaking to one of the guys, and he said, what you need to do is take the Wyckoff course. And that was a course being issued by SMI, and at that time they were in Park Ridge, Illinois, Chicago that is, and they paid for it, $500, which was quite a considerable amount then. And I got hold of this course and I really studied it carefully, you know, really in detail. And but now I know, should we say mostly all about it really. I never really got really skilled at doing these charts until they computerized. IBM came in with the desktop computer. And I thought, ooh, because I realized one of the big hold-ups to personal trading is you're the weak link, because you get misled by rumors, lies, all sorts of things. When there's money involved, you're going to get misled. You'd be very naive to think that even these news announcements, that the trading public, the trading syndicate, or the traders, are not fully aware of what that news is going to tell them. Days, even weeks before it happens. And on that news, they're ready to whipsaw the market in their favour, but against you. And but that's how I actually got into a syndicate trading. And I got on well with them. I was very straightforward, always worked hard, and I got on very well. But it was the IBM bringing out their first desktop computer that got me really going into detail, because to get a signal to come up automatically without the intervention of any human being on a chart that's fairly accurate, right? The information you feed into it via programmer has got to be correct. Otherwise you won't get anything.
Tom, who are the smart money in your opinion?
The so-called smart money, or the professional money, is any trader that can throw in 4,000 to 5,000 contracts at least into a trade. And that will alter the balance of supply and demand, because other professionals trading the same similar amounts will see what you're doing and may join you, changing the balance of supply and demand in the market. It'll change, and that's what drives the market. It's a switching of the balance of supply and demand. And that's what we call a trading person. Not the likes of you and me even, where we only might trade a few contracts. You're talking about 5,000 contracts. As a matter of fact, I know a syndicate not far from here, where we live, that trade 500,000 contracts. But they trade it on news, and they make money. If they lose, you can lose money too if you're not careful.
Tom, can you tell us some from the history when you was a syndicate trader, how the syndicate manipulate the market? An example of it.
Well, what syndicates do, when a stock is issued, right, there's so many shares available. Now, most of those shares are in the hands of bankers to cover loans. They're in the hands of directors so they can keep control. They're in bottom drawers where people never look at them. And so it goes on and on. Funds have them. Now, lots of those stocks are never traded because then they don't want to trade them. But what is left is what we call the floating supply. And if you can corner the floating supply, then you can control the price of that stock surprisingly well. Okay?
Okay. And do you remember any situation you can tell us now after the years, and examples how they can do this? Did they prepare information for the newspaper? Did they give the information about this stock?
They'll do anything
people? Yes?
to promote their position. They'll lie, they'll put false rumours out, they'll do anything, right, that might help them. Now, what we call the absorption is the syndicate is buying up, soaking up like a sponge with water, soaking up the floating supply. Once you've done that, you almost can control the stock, the price of it, with fairly ease. Because who's going to stop you? If you have soaked up most of the floating supply, nobody else bothers, really. They're not interested.
So the right situation and the right approach to the market is to understand the laws of the supply and demand. Can you tell something about this main law?
Well, there was one incident. We used to trade a stock called Teledyne, which headquarters were in Beverly Hills, oddly enough. And they were having their annual general meeting in Beverly Hills. At the time, we were selling our holdings that we bought at lower levels, right? So you send plants into the meeting that are going to ask various questions. And the one question might be said that you point at the directors who are sitting on the stage, right, behind a long desk with chairs. Is this correct that you've got a new contract pending with Saudi Arabia? We hear that you're going to sign shortly. Of course, the directors look around, nobody's heard of it. But the few hundred people in the audience have. Right? When the directors shake their head and say they don't know anything about it, they think, ooh, look, they're hiding that from us. Which they do. Because they can, you know, they know they're being manipulated often because of experience. And next day, they'll go out and buy. And that's what you want. Because you want to sell holdings that you hold. You can't sell because you don't want the price to collapse. So you sell part or more of your holdings into the public coming in buying on that false news. That's just one example. We used to have newspaper reporters that we knew would write an article for us if we asked them.
So one of the main principles is that the smart money are selling on the high prices on the very good news. Yes,
that's the ideal situation. And you'll see that if you follow the stock market. You'll see that serious selling when it appears, will appear as the market's going up on good news. And you can see it on the chart working.
Mm-hmm. So, Tom, do you think that nowadays they use the same, let's say, people emotions to create the emotions on the market and the prices?
Exactly. You know, if you're a professional trader, you're fully aware of what the public as a whole will do if they hold your stock on some particular news. Like, for example, they know, it's been tested many times, if you're sitting in a theatre and somebody shouts fire, you know what the public will do.
Exactly. Mm-hmm.
And they do the same thing in the stock market. No different. They react the same way.
And they react on the information,
yeah.
the price, exactly. Mm-hmm.
Yeah, and most of these public traders are ignorant of the fact that this goes on. They just don't say, oh no, that can't be right. The government wouldn't allow that.
And Tom, can you tell us why the VSA is unique when you compare it to the another kind of technical analytic methodology?
Well, if you use the old-fashioned technology available, you've got a big hurdle to climb to become a proper trader, because there's no question about it, the market moves on supply and demand. If there's more buying than selling, the market will go up. If there's more selling than buying, then the market will fall. And there's no question about that. And if you study the charts and trade yourself, you'll soon become fully aware of this. Now, as far as mathematical formulas are concerned, if you don't know any better, the reason why I assume they don't work, very few people can make money with them, very few unless they're lucky, was that if you or I knew definitely that every Friday when one bar went up and one did this and it was called a MACD or something, it was definitely going to move up or down, you would be ready waiting for it. But there's very clever people in the stock market with money, and they would notice it immediately as well. And the fact is they would be on the trade very, very quickly. Those parameters wouldn't even show up. So how can a mathematical formula work? When you look back in hindsight and you look at some of them and say, oh, look at that, yeah. The reason why they look good, because they wasn't traded. You could trade a mathematical formula out of existence if it's genuine and works. Does that sound logical to you?
Yes, perfect. And Tom, when I talk with my and your students in Poland, sometimes for them it's very difficult to understand that VSA is not only the indicator red or green. This is the methodology how to read the charts, yes? And the most important also in it is the background. Can you tell something about...
Well, remember, when you look at the chart, you're looking at an unfolding story written, right? It's a language written to you in the high, the low, and the close of the volume. Now, the volume is very important because another word for volume is activity. So when you get a certain action on your chart, what's the activity? Is it very high? Is it very low? Or is it just average? It all means something. Because the market's reacting to the amount of activity that's going on.
And Another question, Tom. For example, when you open the long position, because, for example, in the background you have a accumulation, then you have a test. Will you be closing the position when you see the distribution or the confirmation of a weakness? How do you manage your position when you open it?
Well, that's your skill as a trader comes in. Now, say you personally want to raise a loan. Mm-hmm. So you go to the bank, right? You put your Sunday suit on, you've done your hair, you all look pretty good, smart, you look good, okay? And you walk into the manager's office, shake hands, and he says, sit down. Now that manager is not really all that interested in what you look like, mm-hmm. but what he's interested in, what is your background? Mm-hmm. Are you going to repay the loan? Are you reliable? Mm-hmm. And so on and so on. The questions like that will all be in his mind. It's the same thing with the stock market. The stock market will only start distributing when weakness appears in the background. Mm-hmm. And they'll only buy and do what we call testing if there's strength in the background. So you've got to overcome that and recognize that. Mm-hmm. Whatever the market's doing now, right, is due to background information and activity.
Tom, how did you create the VSA methodology?
The original invention, shall we say, or thoughts, came from a gentleman called Richard D. Wyckoff, who lived or died in the early 30s, and it's all developed from that originally. Now the whole thing that triggered me off was when IBM announced that they developed their first desktop computer. And I thought, wow, that sounds wonderful, because if you could cut out human emotion and mistakes that human beings make, which is one of the main reasons why people lose money, right, you've got to be well on your way to a success. Because you can't, with a computer, you either got it right or you haven't. If you've got it wrong, you'll never get signals that look any good at all, I can assure you. And it took me several years of quite expensive hard work developing the signals that worked in a computer.
Will VSA still works in the future, because lots of people start learning this methodology? Yes?
Many people have asked that question, but it will work, because it doesn't matter how many people use it. Right, the markets work on supply and demand. It doesn't matter how many people are there, right? It will still work, no question about that. And you've got to keep in mind that if it was possible, and you could go around to every person in your city or town where you lived and ask them to trade one contract all day long as vigorously as possible, right, and add up the volume, it would hardly make any difference at all to the official volume when it came out. So it's not going to make a lot of difference, because the way the markets work. And very few people will all do the same thing all at the same time.
Tom, in the accumulation phase, when we have it on the market, what is important and what you are looking for in the charts when you are looking on the accumulation phase?
Well, when they start accumulating, they can't hide it from you, because first of all, you put yourself in their shoes, think like they do. First of all, before you will go into a market and buy, you need vulnerability of success. In other words, you need a bear market behind you. In other words, lower prices. Then that attracts you to thinking, right, Now I might be able to buy into this market, sell later, let it go up and then sell later. So that's the first criteria. They're not accumulating unless you've got a down move or some sort of bear move behind you, which is logical, isn't it? Right? And then they buy as the market falls. Now, there are no friends in the stock market, and other professionals, floor traders and people, they will make money out of you if they can. There's no friends in the stock market. So you, with your 5,000 contracts that you want to buy, you have to enter the market as the market falls, goes down, usually into, say, fresh low ground, right, bad news of some sort, right, and you'll see on the chart it's marked as a red down bar. The spread will be narrow. The reason the spread will be narrow, because as the selling comes in, they're buying, mopping up those shares, causing the floor to appear under the price, and that makes the spread narrow as the market's falling. Then the next thing is you see there's massive volume. Don't forget, volume is activity. Now that you know immediately when you see that scenario, right? Down bar, narrow spread, probably closed in the middle, massive volume activity. That has to be professional buying. Can't be anything else if you think about it. So we know they're moving into the market. Now the only other criteria we want to know is they'll want to test that level of supply to make sure that all the supply has been removed from the market. Because the biggest danger to a professional player is that other professionals will dump large amounts of their holdings onto you, preventing you from trading up, and you will lose money. So then we call that stopping volume. There's a signal that appears that tells you that's here. So we know they've moved into the market. And then you have to learn to recognize what we call testing.
So testing, it means that the price come to this level when before was a big volume and now it is on the low volume.
That's
yes?
right.
Exactly.
That's right.
It means that there is no supply in this level and the price is ready to rise up, yes? Tom, we know that there is a distribution phase on the market. Can you tell us what is important and what you have to look for on the chart when you are looking for the distribution phase?
Now distribution is the opposite, right? You need an up move behind you rather than a down move. Once you see a bull move, right, then it makes the market vulnerable to professional players thinking they would like to take some profits. Of course, it can vary. And that means they want to unload holdings that they bought at lower levels. Now, the best way to do that is encourage up moves, encourage good news, tell the world that everything's wonderful, and we're now on a bull move, right? And then on that surge of buying from that news and rumors, whatever it is, you unload into their buying. And that is fairly obvious when it appears on the chart too. Because you see the up move, the spread narrows, but the volume gets very high. And then if you don't know what you're looking at, I've heard them on TV saying, oh, the market's moved up. And it's all buying because we can see it's gone up and the volume is very high. That's buying. But not necessarily. Because they assume that because the volume's high, everybody's buying. But that's not so. That could be weakness in there as well. They're buying, the public are buying, but the professionals are selling into the buying. And that creates high volume. If you look at the spread and it's narrow, we've got a signal for that called the end of a rising market. And that was that goal we were talking about earlier on.
And the main problem which have traders sometimes is to recognize if we are in the correction move or we are in the new trend which are starting. So can you tell about this, how we can recognize by VSA that we are in the correction move, and after this the trend will follow the next price?
Well, the thing is, once the market has been sold off by professional money, that's people with 5 fixed value contracts, right? They may, in most cases, hold the market up, right, while they possibly sell more, or mark it up in what we call an upthrust to catch stops, mislead as many people as possible. And that confirmation then that is definitely whole distribution area. You've got to be very careful because they'll lie to you all the time. You can't believe what you hear on the TV or what you read in the newspapers.
Tom, can you tell us what is your favorite VSA setups and what you are looking for on the charts when you want to make a trade?
Well, we do what we call setups. And we've been only addressing that really recently because we realize that if you want to trade and you've got literally thousands of charts to get trades out of, right, you're going to miss a lot. And therefore we've set this up, this system, because the automatic signals have got numbers on them, right, we can actually get you going on a likelihood of a good position for either a long trade or a short trade. And you'll pick it up as you go along, you can't help it. Especially if, but the big failure is to get all excited, rush in and start buying or selling without understanding what's going on.
Okay. And can you tell us about the situation on the gold? Because some weeks ago, gold collapsed. We have on lower prices.
Oh, gold.
Yes, gold. And
yeah.
Now we have a little move up. Yes. And did we have a bottom of the gold behind us, or you are still expecting lower prices in the gold?
Well, we were. You see, as far as the chart was concerned, there was a very good signal. Matter of fact, one of our favorite signals called end of a rising market that appeared in gold.
That was on the top, yes?
Yeah, right on the top. Now, at that time, they were talking gold up. But when you see a signal automatically appear with a computer that's got no emotions, couldn't care less whether it's going up or down, telling you this is the end of a rising market, it must be there for a reason. And of course, the reason was it was being swamped by selling supply from professional money. And that's why the signal appeared. And it's been going down more or less ever since.
And what about the situation right now on the gold, which we have now? Are you expecting lower prices?
It looks, I haven't studied it recently. I think I looked at it yesterday briefly. And it looks if it wants to fall a bit more. But don't take me on that right now. But it's certainly not bullish.
Okay. And another thing, and what do you think about the American stock exchange market? For example, S&P. because we see that there is an uptrend from the long time. Yes.
Well, the S&P, I looked at that. I do a newsletter every week. It's only brief. It's just long enough for people to get some idea how to read the market, but it's not boringly long. And I only did one this morning. And it looks like the S&P, the Dow, wants to go up next week.
Okay.
Now, we're not talking about a big bullish move. We're talking about going up.
Okay. And Tom, can you tell us also what do you think? Because there are lots of situations that people try to copy your work.
Yes. Well, naturally, when people look at it, they think, oh, that's interesting. And of course, the truth rings a bell in your head that it's obviously true, what we're telling you. And there are lots of clever people out there. You know, there are really clever people. And if you happen to be a clever programmer, they think, oh, I could do that. But we've had lots of people try it, but it's not quite so easy as they think. So there hasn't been a really good copy made yet.
Okay. So I think that someone have to be careful, because the signs from the software could be not in right place and could put the trader in the bad position. Yes.
Well, yes. I mean, I often look at, I hear people describe a chart on the phone, and I look at it, and to me it's entirely different. It's not what they're saying. So it takes time to get a grip to actually what you're looking at.
What can you advise to the beginners that want to be a VSA trader? How they can start it?
Well, I mean, we've got at least 3 books out. Trade Guide has got no end of videos and recordings. And I always say, if trading the market was easy, everybody would be doing it. Right? But they're not. It's very difficult because of these hurdles I'm talking about that most people are completely unaware of. So the only way you can become a trader is to absorb all the teachings. I mean, I had to learn all this from scratch, where people coming in, they may only be 30 or something, they have people like Gavin and myself explaining everything to them. So it's a very, very short cut to some sort of success. I mean, I was years doing it before I completely figured it all out.
And can you tell also, because from the one side is very good what you advise to do, and can you also advise for the beginners what they have to avoid in their beginnings?
Well, the worst thing you can do is get all excited and jump in and trade in an irresponsible way without actually seeing or understanding the principles involved. And then once you've lost immediately a couple of times, you may get fed up with it and say, this is useless, I'm not doing it. And you walk away and you never will know how to trade. But if you learn it properly, you'll have that skill and that knowledge with you for the rest of your life, and you'll never regret it.
Tom, so could you tell us a little bit about how you met Rafał Glinicki and why you endorse him as the only trader that we recommend to teach VSA in the Eastern Bloc?
Well, that's a very easy question to answer as far as I'm concerned. I met Rafał several years ago at a seminar we held in London, and I was soon very impressed with his knowledge and the way he handled himself and the knowledge he had. And since that date, Gavin and I, we've paid special interest to Rafał, and we've given him special knowledge that I would have accumulated from my years as a trading syndicate. And he seems to be doing very, very well on it. And the main thing, he's dedicated, and we're very pleased to have him as our representative in the Eastern Bloc.
Okay, next question. And why is Rafał the only trader in the Eastern Bloc that we recommend? Because there's several other people teaching volume spread analysis, apparently.
Well, as far as I'm concerned, or Gavin, Rafał is the only person we know that has sufficient knowledge and can tell other people all about VSA. I haven't really heard of other people, but they say there are. But I could certainly recommend Rafał.
Thank you very much, Tom, for this conversation, and we wish you a very good health. Thank you very much, Tom.
Thank you.
I appreciate it. Thank you.